This video is for educational purposes only and is not financial advice. Always consult a professional before investing. It is not financial advice. You should always consult with a qualified financial professional before making any investment decisions. The events described are based on real-world data and reports from the specified time. Friday, October 10th, 2025, will be remembered as a brutal day for investors. Markets saw a sudden and violent sell-off. S&P 500 fell sharply by 2.7%. It closed the day at 5,757 points. The Dow Jones Industrial Average also took a significant hit. It dropped 1.9% to finish at 45,479. The technology-heavy Nasdaq Composite suffered the most among the major indices. It plunged 3.6% in a single trading session. The shockwaves were even more dramatic in the cryptocurrency markets. Bitcoin plunged from about $126,000 to near $101,000. Liquidation surged to between $19 and $20 billion. Total crypto market cap fell roughly 15% to around $3.7 trillion. Trigger, a 100% China tariff headline. Recovery underway? So, what exactly triggered this widespread market panic? On Friday morning at 10:57 a.m. ET, a post appeared on President Trump's Truth Social platform. The post declared a massive 100% tariff on all goods imported from China. This unexpected statement sent an immediate shockwave through global financial markets. Traders interpreted the message as a sign of a renewed and much more aggressive trade war. Markets despise uncertainty. Automated trading systems reacted instantly. Human traders quickly followed suit, leading to a rapid sell-off. The timing amplified the impact. As the day moved into the weekend, market liquidity naturally thinned out. Fewer buyers meant prices plunged when many tried to sell at once. Weekend crypto markets were especially vulnerable. That low liquidity environment turned a sell-off into a crash. A popular stablecoin, USDE, meant to be pegged to $1, suddenly lost its peg to about 65 cents on some venues. This depegging event caused widespread panic among crypto traders. Many automated protocols sell collateral when thresholds break, triggering massive sell orders. On the Binance exchange alone, $2.2 billion in positions were forcibly closed in 2 hours. It was a perfect storm, a geopolitical shock, low weekend liquidity, and a critical failure in crypto infrastructure, all at once. The devastation from the October 10th crash was felt most acutely by retail traders. Reports indicated that approximately 1.6 million individual trading accounts were liquidated. These were ordinary investors, many using leverage to amplify bullish bets. The vast majority of the liquidations, about $19.1 billion, came from long positions. For many, it was a total wipeout of their invested capital in those positions. Automated systems closed trades at massive losses. Some sophisticated players managed to profit handsomely from the chaos. Large institutional investors and specialized hedge funds had placed short bets. On hyperliquid, traders reportedly made about $192 million from shorts. Leverage trading can be zero-sum. For every dollar lost, another is gained. Decentralized exchanges faced immense strain and high slippage. Liquidity pools drained quickly as sell volume surged. Total value locked in some protocols fell as much as 70% in hours. Even decentralized systems weren't immune to panic. Consider Mia, a young investor with a diversified stock portfolio. She also held Bitcoin. As prices plunged, fear spiked as her savings shrank on screen. However, she had a plan and minimal leverage. She'd set aside cash for shocks. Diversification meant some assets fell sharply. Others held steadier. Preparation and risk management helped her survive the storm. Did the crash catch you off guard? After the brutal sell-off on Friday, the market showed tentative signs of life over the weekend. The panic began to subside as bargain hunters stepped in. Bitcoin had crashed to a low near $101,000, then mounted a notable recovery. By Saturday evening, it climbed back to around $113,000 per CoinDesk. Roughly a 12% bounce. Ether staged a comeback to about $3,900. Even S&P 500 futures rose about 1.2% on Saturday. Here's the quick data look. S&P 500, down 2.7% Friday. Futures up 1.2%. Source WSJ. Dow, minus 1.9, up 0.8, MarketWatch. Bitcoin, down roughly 13 to 20%, up 12% to 113K. CoinDesk. Ether, down 18 to 21%, up 11% to 3.9K. Bloomberg. Liquidations, 19 to 20 billion. Open interest halved to about 33 billion. Caladan. The green shoots gave a glimmer of hope, but the damage wasn't undone. A massive amount of leverage was flushed out. Many shifted into cash and government bonds, waiting for clarity. By Saturday, seeing recoveries, fear turned to relief for disciplined investors like Mia. Her losses were real but manageable. She hadn't been wiped out. The October 2025 crash is a powerful reminder of timeless principles. Diversify. Avoid concentrating in a single asset or leverage crypto longs. Use low or no leverage. It protects you when prices move fast. Vet platforms and stablecoins. Even pegs can fail. Use stop losses and position sizing as your safety net. Stay informed. Politics, macro, and markets are intertwined. Expect the unexpected and protect your capital first. Friday Crash Lesson. Diversify. Low leverage. Subscribe for recovery updates and share your story.